Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by experts of avx.co portal. Here we go. Today is January 20 and I'd like to present to you analysis and trading tips for GBP USD with Jakub Novak. But first, let's have a look on 5-minute chart for yesterday's transactions. The test of 1.2327 happened when the MACD line was just starting to move below zero, which was a good signal to sell. However, there was no price decrease as volatility was low in the market. No other signals appeared for the rest of the day. As expected, the RICS house price balance and lending conditions in the UK were unimpressive for traders, so pound did not move much on Thursday. But today, there are important reports that are due, such as the underlying retail sales index and UK retail sales volume. A decline in the figures will lead to a fall in GBP USD as it will point to a slowdown in economic activity in the country. However, it will also allow inflation to fall down, which is good for the Bank of England's plans to get it back to 2.0%. In the afternoon, there is the US secondary housing market sales report, which, if shows a good reading, will strengthen the dollar. Hawkish remarks from FOMC members Patrick Hawker and Christopher Waller could also prompt a rise in USD. For long positions, you can buy pound when the quote reaches 1.2382 and take profit at the price of 1.2440. Growth could occur if the upcoming retail sales data exceeds expectations. However, make sure that when buying, the MACD line is above zero or is starting to rise from it. Pound can also be bought at 1.2327, but the MACD line should be in the oversold area, as only by that will the market reverse to 1.2382 and 1.2440. For short positions, you can sell pound when the quote reaches 1.2327 and take profit at the price of 1.2267. Pressure will increase if there is no bullish activity at the new highs. However, make sure that when selling, the MACD line is below zero or is starting to move down from it. Pound can also be sold at 1.2382, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.2327 and 1.2267. The next in line is Lowry Bailey with USD GPY pair. Let's have a look. After the yen experienced increased volatility on Wednesday, the currency in question is moving sideways, both yesterday and this morning as well. At the same time, traders are still bullish on the pair. The nearest target is 129.80, which is the line of the price channel on the higher chart. In case the quad continues to rise, the upper line of the descending channel, green price channel, is waiting around 130.67 mark. Leaving the channel will open the next target at 1.3360. The Marlin oscillator supports the price growth by rising in its own ascending channel. Crossing the signal line of the oscillator above the zero will strengthen the price to growth. On the 4-hour chart, the Marlin oscillator is rising in the green zone, but grows if hampered by resistance of the balance indicator line, red line on graphic. The MACD line is currently above the price, above the resistance of 129.80 on the daily chart. Also, considering the downtrend, we can assume other market obstacles to the pair's growth. With time, however, we still expect a full-fledged correction from the price decline from October 21, 2022. We've gathered trading tips for gold with Dimitrios Tsappas. Early in the European session, gold is trading around 1931.20. We can see that it's trading near the high reached before the close of yesterday's American session. The high reached for now is around 1935.08, the level last seen on April 25, 2022. According to the 4-hour chart, we can see that gold is very overbought. The plus 28 Mari line, located at 1937.50, represents a strong technical reversal, and as long as it continues trading below this level, gold is expected to fall. Risk aversion dominates equity markets, helping gold extend gains towards weekly highs. Investors view gold as a safe haven asset amid the deteriorating global economy. Geopolitical risks are also likely to remain elevated for the second year in a row, encouraging investors to take refuge. The charts of the gold pair show that a bearish correction could occur in the next few hours. The Eagle indicator on the daily chart and on the 4-hour chart shows overbought levels. Hence, investors are likely to take profit, and this could favor a technical correction for the next few days. Given that since January 13, gold is trading around the 1935 area, a technical correction is likely to occur because the market is showing signs of exhaustion. Our trading plan for the next few hours is to sell below 1931 with targets at 1912, 21 SMA and 1900. Middle term on Euro-dollar pair. Oscar Tone presents the review. Euro-dollar pair rallied through the 1.0844 highs intraday on Friday before finding resistance zone. The signal currency pair is seen to be trading just below 1.0830 at this point in writing, and could slip below the 1.0770 interim support anytime soon. That would confirm that a meaningful top is in place at 1.0887 early this week, and the bears are back in control going further. EUR/USD has risen in the past several weeks from 0.9535 low through the 1.0887 high. In the process, the bulls have taken out a major resistance around 1.0786. This price action is indicative of the fact that the instrument should be preparing for meaningful pullback towards at least at 1.0370 and down to 1.0050 in the next few weeks. Euro-dollar pair is still vulnerable to a bearish reversal from the resistance zone of 1.08, 1.09 as marked on the daily chart. Immediate support is seen at 1.0481, while resistance is around 1.09 respectively. A break below 1.0481 will add further confidence to the bearish target of 1.0370, followed by 1.0050. That's all for today. See you next time. Good luck.